Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday, June 6th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick on the show today. Got a surprising amount of news. I thought it was quiet when I got in today, but there is some news. We got going to talk about Fred, Winnebago, Michaels, the soda tax that was passed in Seattle. So that means we're going to talk about our favorite stock in the world, Fizz. Got a guest at 8:15. That is Jack Kramer. Maybe you get his newsletter. It's Market Snacks. He is the co-founder and CEO of Market Snacks, a daily newsletter that comes out every morning around 6:30. Nice little market roundup. So he's going to be on the show at 8:15 to give us his thoughts on a couple stocks. And no Nick today, unfortunately, so we'll have Nick back on next week. Joel, how are we doing in the S&Ps right now?
Before we do that, we got to welcome back our ace intern, Dylan Wittenberg.
Dylan is back with us.
Dylan's back in the house, so he'll be subbing for Spencer. Dylan got into Harvard, but he has decided to go to Michigan in the fall. So congratulations to him.
That's fake news. It's fake news.
Fake news, okay.
Fake
and
news.
Also, so we're talking about top interns. The number one intern in the history of Benzinga, Luke Jacoby. It's his birthday today, so happy birthday. A shout out to Luke here. S&P futures are deeply in the red this morning. We're down 6.25 points. Tight range yesterday. Took out yesterday's low. Trading at 28.25, down 6.25. Gold trading up $11, knocking on the door $1,300. Silver moving towards the $18 level. In crude, we got an important level to take a look at in crude. Today's low, 46.94. We have two other lows in the 46.80 area. All right, Dennis, how you doing on this busy Tuesday morning?
Just rebooting my computers because I had to shut them down a couple times, like you say there, Joel, because I didn't believe that we were trading down here this morning.
Yes.
So I was checking, but it's accurate. We are actually trading down here this morning. The question is, how long does this dip last? Is it going to be? Are we still going to be down at 9:30 when we open?
Dennis,
or will it come in faster than
yes,
that?
9:30. All the lunches.
9:30, we're going to be red.
Yes. Yeah. The question is can we get back above the pre-market high, 35.25? That's 7 points away. I think we got some work to do on the downside today, Dennis. I will give up an edge here, but let's wait a little bit longer in the show before I propose a bet.
Too early for bets. 8:03, and I'm still groggy, so it's too early for bets here. But lots of action here. Obviously, overnight, we're getting beat up here on the S&Ps. But individual stock news, there's a little bit here. We've got a couple earnings reports. We got a vote over at General Motors, like you were saying. There's a Seattle. Where do you want to start, Spencer? We'll let Spencer lead the way. He wasn't here yesterday. Lead the way, Mr. Spencer.
I'm honored. Maybe let's start with this Seattle thing. So Seattle City Council voted on Monday to approve a soda tax. They're not, of course, not the first city to do so. I had a list in front of me and I lost it, but I think they're the fourth or fifth major U.S. city to add a soda tax. So looking at KO, Pepsi, DPS, Fizz, Procter & Gamble, MNSTs, Monster, Starbucks. A lot of places sell soda.
What is the purpose of the soda tax? Do they say? Like, obviously, they want to get a little more extra revenue, but how are they justifying charging?
No. It's always to discourage, sugary drinks.
Diabetes.
Yes. Yeah.
So
I mean, that's it.
They will tax you if you're going to drink and try to, cause diabetes in yourself. We're going to tax you for it.
It's more than that. It's more than diabetes, Dennis. It's overall fat and, the unhealthy.
It's overall health.
Yeah, overall health.
But still, is there a right, though, to dictate how, somebody wants to consume and, okay, well, this is bad for you, so we're going to tax you for doing it? I mean, is that still right? Even though if people want to drink pop, everybody knows soda, so pop is not good for you. You want to drink it anyways. That's your problem. I don't see why you can still justify a tax for that.
It's supposed to take effect in July. Other cities include Philadelphia, San Francisco, Oakland, and then part of Chicago. So this thing is slowly spreading, the soda tax.
And this fizz stock that you have been following, Joel, has been benefiting from these soda taxes that are coming in. And it's because why? They make the non-sugar drinks?
They make a lot of them, and that's one reason that I, would not stay short this stock. It first happened in Philadelphia, and that gave the stock a big boost. And we talked about this major run that it had, and what I was thinking in the back of my mind is, well, what if the next city, or two cities or three cities do this? Whether or not it's right or wrong, they are doing it, and it's having implications. I don't know if Coke's trading down or not, but if you're wondering why the stock is almost doubled, it's doubled this year, basically, from 50. I'll probably trade 100 today, is because of the soda tax. I don't know.
I'll take the bet on no 100 today. Just to interrupt you.
What kind of odds?
I'll give you 3-1 odds that it does not trade 100 today. It's 94.74. No way is that going to 100 today. I shouldn't say that because I'm going to talk you out of it.
Okay, you talked me out.
That's a long ways away.
Not for this thin thing, man. You've never seen it trade, but we'll see.
3-1 odds. I'll give you that it does not tick $100 today.
5-1.
That's a good bet. You could get all your lunches back.
No. It's too far. If it was bid up right now and it was trading, what's the bid offer?
It's 92.50 to 95.88. No shares have traded. Nobody cares, or maybe they care, but the people who care aren't awake yet.
Okay, I think you need to lift at 95.88, but we can move on.
It's 10,000 shares there actually too, so it's not even 100 shares. That's a big offer. I wasn't going to tell you that part.
Okay.
I wanted to get you on the bet. 10,000 shares, 95.88. Is that a number? What's 95.88? Oh, that's the high. Somebody's sitting out there at the old, or near the high, I guess it is.
Yeah,
6.
Yep, 96. So we'll see how this affects Coke and Pepsi today.
Let's talk Pepsi. I haven't talked Pepsi in a long time, and Pepsi's a stock that's been making new all-time highs here as well. It's a day that looks like it's going to be risk-off at the open, and we know those types of days actually stocks like Pepsi can do well because they are more defensive here. PEP, give us your quick thoughts here.
118.12, triple top, big seller at or near the point, so that's your resistance level. It ran into this at like other whole numbers. Actually, it was around 113. It pauses here. 118.12 all-time high. Look for a big seller or a secret seller in the book at the 118 level.
Spencer, you going to lead the way on where we're going on our next segment here?
Oh, wow. Wow, 2 for me. Okay, well, let's go.
Got it. You're the leader today. I'm following the leader.
All right. Well, let's go with GM. So today is the day GM shareholders are set to vote on David Einhorn / Greenlight Capital's plan to split the stock up into a few different share classes. This story's been going on now for a couple months, I think, and today is the day that they vote on the proposal. GM just released a statement yesterday morning that basically said they believe it's clear that the market has rejected Greenlight's hypothesis or idea of what should happen. Again, he's trying to split the stock into a few different classes of shares, and today's the day of that vote. Let's take a look at the chart.
It's been coming up. General Motors has been on a little bit of a comeback. We've been saying, though, the dogs have been barking, so it fits the description, obviously. We know Ford's come back as well. So automotive showing a little bit of life. GM been showing more life than Ford. The one problem I've got here in the chart, and I know what you're going to say, maybe the same thing, Joel. You go 38, 32, 6 points, take the 50% retracement back. It's right around that pesky high that we had back in May, just above $35. So you're here at 34.50. I kind of see resistance forming up there at 35, and that's why I don't know if I'm coming here buying it today.
From what I read, it doesn't look like this proposal has a lot of legs to it. Breaking up the company, of course, talking his own book. Was it Einhorn saying that this is worth $45, $50? I mean, these autos have been puzzling for a long time. We know Mr. Buffett, until his next disclosure, has a nice position in GM. Nice dividend, but if you're looking for capital appreciation, it just hasn't been there. Big range, Dennis. Not big range, but 32 to 38. You talk about that $35 level. Just a high, just above that. So we'll see what happens until it gets above 35 here, though. I think you're really at the top of a range that's been holding up for about the last month.
Einhorn's been fighting it a little bit here too. We know he was the, famous obviously back in Lehman Brothers for the big short call that he made, and he made a lot of money shorting Lehman Brothers almost to zero. That's what put him on the map, and his stock, Greenlight Capital, actually is publicly traded, GLRE, and it's been struggling here if you bring it up, Einhorn. But I mean, all active management has been a little bit of a struggle. I actually saw a tweet go by my timeline. I should go try to find that right now before I misquote it here. But hang on, I'm going to find this tweet here this morning. It's about active management versus passive management. And if I just look, I retweeted it just about an hour ago. Yeah, here it is. It's from Validia, John Reese, and he says 20 years ago, about 20% of actively traded funds were generating alpha. Today, that figure is only 2%. So basically, only 2% of actively traded funds are beating the market. Difficult game to beat the market.
Yeah, especially when the market goes up 6, 8, 10% a year. And another thing.
Yeah.
We haven't heard from Icon in a while here as well. I know it's Herd's position and a couple other things, but man, it's tough to beat the market when it has these kind of consistent gains.
And the Icon chart is ugly too. I mean, look at IEP. And the thing is, these guys got an advantage. Remember too. I mean, somebody like Carl Icahn buys a stock, and then it gets disclosed, or he tweets about his stock, and it's going to pop 3-4%. So these guys basically already have an edge. When they buy a stock, it's going to go 3 to 4% in their favor, at least just from their disclosure of owning the position. So when they're underperforming, that's also their influence that is underperforming as well. So they haven't been doing that great here, Joel.
Yeah, credit to you on this one, Dennis, because you've always been talking about the net asset value of this, and it has to be getting close to it, isn't it? 47.86.
I don't know. The net asset value's been coming. Let's do a quick Google and see if we can find it. Or Spencer, if you want to have a race, I just go to Google usually and I go Icon Enterprises NEV, and let's see if we can find. It's only disclosed quarterly, obviously. So let's see if we can find the last NAV. Oh man, I don't know if I can find it here quick enough on a live radio show. I know it was kicking around like 30 or 35 bucks,
okay.
But it doesn't matter whether it's come down. We'll come back to it. It's too hard to do on a live radio show to find in time. But the stock price has been coming down. I mean, back when this was 147, it was trading almost twice as much as NAV. And that's the one thing to consider. When you are buying these funds like Icon Enterprises or Greenlight Capital, go look at what the NAV, even Berkshire Hathaway, look at what the NAV is. Look at what the actual value of the holdings are and see where it's trading relative to it. Because when you're paying a 20, 30, 50% premium, that's a lot of premium to pay for that money manager. So as opposed to being able to just go buy those stocks outright.
All right, 8:13. Let's get a couple earnings reports.
Let's get the CSIQ. I saw someone bring it up there in the chat. Johnny did. CSIQ had earnings this morning. Canadian Solar Q1 adjusted EPS of a 10-cent loss versus a 4-cent gain estimate, so they missed that number pretty badly. Sales of $677 million versus $609.9, so they beat that estimate. And total solar module shipments are 1.48 gigawatts. Their Q2 sales guidance $615 to $635 million.
I've got this one in my investment portfolio there. I put it in there just a few weeks ago, maybe actually over a month ago here now, and I'm down in it. I bought in the lower 13s. I'm sticking with a speculative position in my investment portfolio. I'm saying it's speculative. I know it's a $13 stock or $12 stock now, but it's still speculative money here because I think, I was going with our friend there who was on a little while ago, Gordon Johnson, and he had upgraded the stock, and he was saying, I forget it, he was saying like this is going to be in the low single digits or it's going to be like a $30 stock, I think. Wasn't he saying something like that, Joel?
I just remember
it depended on something. It depended on something. I don't remember what. But I was like, Gordon Johnson upgraded, I'm in.
I can find it for you real quick. It was dependent. It was like the best case scenario, right? For hold on. Let me read through
best case scenario. He said something about the 30s, but then he said if this doesn't work out, stock's going back like $6 or $7. So I like the risk return when he set it up like that.
Okay, $18 price target. If you add in sales from projects in the UK, China, India, Brazil, and Australia, that could add another $30 to $40 in value to the shares.
There you go. That's where I was getting that from. So, but then he didn't know, and if that didn't work out, whatever was over there, then it was worth less. So.
Kind of
here, I like the risk return.
Yeah, just a wishy-washy chart here. I see major support at 12 and major resistance at 14, kind of just trading around in the middle. A couple closes right here under $12, so right in the middle, 13 you need to clear. major support 12, major resistance 14.
All right, 8:15. Let's take our only break of the day. We'll grab Jack Kramer. He's the co-founder and CEO of Market Snacks, a really great morning newsletter that I subscribe to. Gives you a nice little roundup of the market. So we'll be right back with Jack. Alright, back everyone to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elkanin and Dennis Dick. We're on the line now with Jack Kramer. He's the co-founder and CEO of Market Snacks. Jack, how's it going today?
Good morning, guys. Good to be with you.
Thanks for coming on. So before we get into your thoughts on the market, tell us real quick about Market Snacks and what exactly you do.
Definitely. I'm the co-founder and co-CEO of MarketSnacks.com. Market Snacks is an email newsletter covering business and finance news. And my partner and I actually started it shortly after college because there was no quick way to learn what happened in business and finance. And we knew there could be a better, quicker, simpler source of digestible finance news. So we started a daily newsletter. And we actually scaled it outside of our day jobs in finance. And it's become the voice of financial news for millennials.
And you did this as like your side hustle. This wasn't your main gig.
Exactly. So we started it back in 2012. I was working in finance. My partner was working in venture capital, actually. And the two of us, we realized that tackling the Wall Street Journal every day was a daunting task for young professionals. And for college students, not a chance. So we knew there must be a simpler way to understand what's going on in the market. So we created our curated newsletter. We figure out what are the 3 to 4 biggest stories every day. We actually tackle the news during our day jobs. Just as a result of being on Wall Street and being in finance, we knew what was going on. And at the end of the day, every day, my partner and I, we sit down, we figure out what's interesting, what's a hot story, and we put it all together in our newsletter and deliver it to email inboxes at 6:30 a.m. the next day. So we were able to scale it outside of our day jobs.
All right, I want to get your thoughts on the Worldwide Developer Conference Apple's giving. It started yesterday, and I had the day off, so I was a little bit out of touch. But can you give us some highlights? From the conference yesterday.
Man, I'll tell you, Apple events where there's no iPhone unveil, we kind of think of them as hockey games without a fight. We kind of thought they were going to be missing that special excitement. But Apple was so impressive yesterday. They did more in one conference than Yahoo's done in a decade, in our opinion. They unveiled new hardware. They had a bunch of software updates. They talked about virtual reality. What we focused on at Market Snacks was the HomePod, which is their home assistant to compete with Amazon's Echo and Google Home. And, it's actually a premium speaker service. It's basically a souped-up Wi-Fi speaker. But it also incorporates Siri and the Home Assistant to help you get through your day-to-day.
So after yesterday, are you feeling better or worse that Apple can overcome their iPhone quote-unquote problem, right, where they're so reliant on the iPhone and they have nothing else in the bag?
I feel better about it because, I think that one surprising thing about yesterday and with this HomePod and with some of the other rollouts they did, we saw them mostly as defensive plays. Instead of the Steve Jobs mantra where you create a product that consumers don't even realize that they want. Yesterday, they mostly came out with products that had already been rolled out by Google, by Microsoft, by Amazon. So that was a little, that can be concerning in one way. But we think that having a home assistant to compete with Google and Amazon is important to keep Apple as a sticky product and to keep consumers within the Apple ecosystem. So, my friends and I, we use Venmo 3 to 5 times a week. We're constantly sending each other payments after meals, and it's part of our banking system, no question, probably more so than our typical bank account. And yesterday, Apple, unleashed a software fix that lets you send payments to friends within iMessage. iMessage, which is one of our most used communication forms there is. So we think, just by making Apple a more critical part of our ecosystem, that was a great way to keep Apple users, even going into the future. And the HomePod, what I really like about it is that it is a premium a premium Bluetooth speaker. I bet you guys have probably bought gadgets before and realized a year later that you never even used it once. The key example for me is a GoPro camera. I bought that thing. I used it maybe one time, couldn't even figure out how to upload my video onto the web. And I think a lot of users, as they're thinking about entering the AI world and having virtual assistants like Siri or Alexa, a lot of people don't even use those things yet. I think as of 2017, 36 million Americans will be using home assistants, and that's a pretty small number. So even if you're wary about, buying one of these products, with Apple's HomePod, you're still getting, a home run Bluetooth speaker system. So I think that will help them sort of be a leader in that market.
I want to ask you about Goose. Canada Goose had just had their first earnings since the IPO last week. They, of course, beat. What was your impression there?
Well, Canada Goose, the ubiquitous big black down parkas with fur-lined hoods. They dominate on college campuses. They dominate in cold city blocks. And yesterday was their first earnings report since their March IPO, and they really impressed. I mean, they generated a loss, and their revenues grew 22%. Those weren't the impressive parts. What was really the good thing is they're really showing improvement on direct to consumer, cutting out the middleman.
Joel, did you have one?
Yeah, I just got one question. I was looking over your site and I saw you had the top 5 stocks for millennials and stuff. I just wondered what your methodology is for, valuing stocks. Are you a top-down fundamental analyst where you look at the earnings and the revenue and the growth, or are you more on the technical side where you're looking for technical setups and the issues that you choose?
Great question. Thanks for asking it. I think that's where there's, a difference between Benzinga and MarketSnacks. We're really not technical stock analysts. What we are is we're news people. So our, the people who we cater to are, young professional people, millennials who want to be informed and they want to know what's going on in the world. And I think business and Wall Street is a crucial part of the news world today, and they're affecting markets, they're affecting politics, they're affecting the way we live. So what we do is, we try to keep 3 to 4 different stories that we cover every day, because we think that is, an amount that will keep our email simple and, under 3 to 4 minutes reading time. So we'll typically cover stocks that are relevant to millennials. So we like to cover the fast casual food segment. We like to cover fashion stocks. We like covering tech. We like covering media. So anytime a big name like that comes out with a big story, we'll cover it. But we also cover the macro stuff, the stuff that you need to know. So we started MarketSnacks right around the European debt crisis, and that was a big topic that we covered every day. Because if you're not if you're not following that and know what's going on there, then there's a big gap in your understanding of the world.
Jack,
so
what
we're
are
really,
those?
Really
Sorry,
news people. I just want to stress that. We're not really stock analysts.
Okay, well, I'm going to take you back in the stocking line because you said you had a top 5 stocks, though. What are those top 5 stocks for millennials?
I think the top 5 stocks you're referring to is an article we did a couple years ago. So they've actually changed in the meantime.
Gotcha.
Yeah, but we definitely cover the big 5 tech companies. Facebook, Amazon, Google. we love covering Chipotle in the food world. Shake Shack, coming as Market Snacks was born in New York City, Shake Shack was our burger place of choice. So we love covering that and seeing how their business model is affecting the food segment. But we basically cover the companies that are creating products that we use. And who are we? We are, millennials who are embracing new forms of business models, who, typically have a desk job and are working in cities and are really excited about the way that innovative companies are changing things.
Jack, I met you a couple weeks ago, and you mentioned this project that you've got going on, in the background here, with regards to the future of mobility and transportation. And I was wondering if you could sort of explain out what your longer term thesis is about that field.
Yeah, thank you, Spencer, for mentioning that. Actually, since being in finance in New York, I've actually moved on to grad school. So living in Michigan now, living in car country. I'm actually getting an MBA and a Master of Public Policy at the University of Michigan in Ann Arbor. And so, being in Michigan, transportation and transformation of mobility is a huge topic. And I'm working on that at the University of Michigan as a Dow Sustainability Fellow. So this is one of my side projects I have as I've come back to school to be a grad student. And, I think in the news, we talk a lot about autonomous vehicles, and a lot of what we're talking about is how the transportation landscape will look in 10 or 15 years. But what fascinates me the most is what's happening today. So I've actually, I actually grew up in Vermont. I lived in New York for 5 years. So I've been in the most car-centric place there is, and in a place where having a car is totally uneconomical. Now I'm in Michigan, sort of an in-between area where a lot of people in my situation have to decide, am I going to buy a car for myself, or am I going to find ways and, use Uber, use Lyft, use car sharing services, use public transportation to get me where I need to go. And so I think what the big concern is for Ford and General Motors, Detroit's big car companies, is that more people in my position are deciding, I don't need a car. And so one of the projects I'm working on right now is in an area that's, as unsexy as it gets, public transportation. But we're actually finding ways to make public transportation so much better by embracing and integrating technology and on-demand ride-hailing services.
I'm sorry, keep going.
Yeah. So I've come up with a team at the University of Michigan, and we're working with the local transportation agency in Ann Arbor. And, basically, the public bus system in Ann Arbor, it's sending buses, into some sparsely populated areas on the outskirts of town. And that's a really inefficient way to move people. Sending a bus once every hour is pretty poor service for the residents in that area who have to walk a long distance to get to a bus stop, possibly wait up to an hour for a bus to get there. We figure there must be a better way. So what we're doing is we are embracing technology and basically the GPS devices that everyone has in their pocket with their smartphone, to, instead of sending buses out there, which, sometimes are running empty into sparsely populated areas late at night, we're finding ways to use ride-hailing technology, similar to what Uber and Lyft use, to send on-demand door-to-door pickups, which would be subsidized by the public transit agency. So we're very much in the R&D stage in this project that we're working on with the transit agency, but it shows that technology can make alternative forms of transportation besides car ownership good enough that people might decide that they don't need a car anymore.
We've been on the line with Jack Kramer. He's the co-founder and co-CEO of Market Snacks. I think a few people in our chat, Jack, may have signed up for your newsletter during this interview, so hope they enjoy it. Jack, thanks so much for hopping on today. We will talk to you again soon.
Yeah, Spencer, thank you very much. Joel, Dennis, great to hear from you guys.
Thank you. Go Blue.
Thanks a lot.
I cut him off after that because enough Michigan talk for one show. That's enough Michigan talk. All right, let's get back to the markets. We talked about CSIQ. I know Dennis had a few other movers on your radar. You mentioned Winnebago. You mentioned Fred's. You mentioned Michael's. Where would you like to go?
Yep. You know what? Just because it's 8:30 and 10 seconds after, I might as well give you the imbalances here because it just came out. So good timing here for that. Just looking here, your financials are weak here this morning. Bank of America 82,000 to sell, but that's what's really standing out to me when I'm looking at my sector analysis from pre-market trading. It's the financials are looking weak here early, so I think that's where your laggard. That's going to be one of your biggest laggards here. That sector. Citigroup down almost 1% here now. Bank of America trading down almost 1%. J.P. Morgan, Morgan Stanley, Goldman Sachs all down significantly here this morning. So those are where you're seeing some weakness here. I'm seeing a sell balance in Twitter, 48,000 shares. Did want to mention Twitter just because we're not pattern traders here on the show, but man, does that look like a head and shoulders or what?
Dennis, you nailed it, and I'm not going to disagree with you here. You have
Looking
that,
at the May chart.
May.
Look at it from May.
Well,
Big run up.
Yep.
The left shoulder there, neckline around 18, head up there when it had the pop up almost to $20 when it got up to 1978. Then the right shoulder is formed here around 18 here again. It takes out that neckline at 18. Look go below.
Yeah, I mean, there hasn't been any really good fundamental news on it. It had the earnings pop and then the drop. I mean, the thing is below 18, you got a lot of real estate there. Easily see 17 to 16, and then a big gap to fill from earnings. So there it is setting up. I'm not sure. We'll take a look at the pre-market trading. But, Dennis, I'm not even going to try and fade you on this one here. It's 18 is a big level. We'll see if it can hold in today's session. And
Needs to hold that.
Dr. J's been real patient on GII, and boom, boom, boom.
GIII, G3.
Yeah, G3.
Right.
And
that's a lot of eyes.
Yeah, this chart here, I mean, I guess you could be patient here. You've had a trading range over the last, what?
Well, what is the news here today? It's up $5.
Yeah,
well,
they had earnings and they raised their fiscal year outlook. So they had earnings, which is fine, but they're raising their EPS outlook by 24 cents, which is a pretty big jump.
I don't know anything about G3 apparel. Is this a mall retailer or this is their own clothing designer? What is G3? Do you know, Spencer? Do you wear G3 clothes?
No,
he wears GQ clothes.
No. They have a bunch of brands. They own let me think, like DKNY, Tommy Hill, they're
okay. They got a whole bunch of them.
like that type of foot,
Gotcha.
like leather goods, luggage, footwear, like that type of stuff.
This just fits the bill. So, okay, what was the earnings report? What were the numbers?
Well, okay, let's get to the actual numbers then. Q1 adjusted EPS of an 18-cent loss, sales of $529 million versus $457 million year over year. But like I said, that's not what matters. What matters is that they're raising their outlook, their fiscal year 18 EPS outlook. It was 80 to 90 cents. Now it's $1.04 to $1.14. So a 24-cent increase on the fiscal year EPS. And the sales was $2.73 billion to $2.76 billion is what they see. And then that's it right there.
Dennis,
you know what matters more than even those numbers?
25.
The fact that the stock has been weak.
Yeah.
And it's just been weak coming in, and you get a little bit of a short squeeze going here now. The numbers, like guidance, obviously, you were saying raising their outlook, so that's not good if you're short the stock here. And obviously, just it's weak stock, so they didn't have to do very much, in this quarter. When your stock chart looks like this, if they come out and raise their outlook, it's going to rally. Just because everybody is banking on this thing not, performing well in the last quarter with stock at 1989. So big pop here, 23%. I don't know what the short interest is, but if they're short, they're getting squeezed today.
Very easy chart to look at here. And you got the pre-market high of $25.30, now just congregating under the $25 level. And that's going to be your key for the entire session here. You've popped over $25 or near $25 6 times since April. So all of the people that sat through here and sat through this pain and sat through that $18 low here, right here you're at a major area of resistance. I'm not going to say the high is in here, but I'll tell you, if I look at this thing after the first half hour and it's not trading firmly in the 25 handle, I just can't see people not taking profits on it. Dennis, any thoughts on that $25 level?
This is just, a stock that can go anywhere, really. When you start seeing them pop 23, 24% here over, just over an earnings report here, and the stock has been so beat up. I mean, go out to the monthlies and look at this thing with $71 here back in 2015. So can it go higher than this? It can. There is resistance up here, but am I coming in here and saying, okay, this is the top? It's going to be hard to call the actual top on this thing because a lot of factors involved. A big move here today. I mean, just looking out to the weeklies here, it started the year up around $30, and so there's some room still to the upside as well. Kind of more in the middle of nowhere for me, so I'm hands off on this one.
All right, GWW is being asked by here by Downwire Dog, and boy, oh boy, we got some news on that this morning, right? No, we don't. No news.
Oh, we have a JP Morgan initiation with a neutral rating, thanks, and a $180 price target.
The neutral rating is like my pet peeve. What do I do with that? I mean, okay, you're coming out with a neutral rating, so you have a buy or a... Why even bother? I mean, why even bother covering a stock if you're just neutral on it? I guess it's when you go from buy to neutral or something. It's saying now I'm just thinking it's going to perform by the market. But when you initiate just at a neutral, why bother initiating at a neutral? Really? Joel, can you answer my question here? I don't know why you come out just neutral on stock. If you want to come out with a buy or you want to come out with a sell, cool. That's something you're making an opinion. But when you come out with a neutral, it's like, I don't know where this is going. I'm going to initiate it at neutral. I think it's just going to perform with the market. I'm going to initiate it.
Sorry, actually, that was Friday. I misread that. Sorry about that.
Anyways, that's my pet peeve. Tangent.
Okay.
Going back to GWW.
175. That's what I'm looking at here. You have 1, 2, 3, 4 lows just under the 175 level. So, boom, until it takes out 175, trading 173.96, that would be a breakout. Trying to find some support on the downside. The low of the move, 169.75, backed up by a 170 low. So, trade to range 170 to 175 here, but that's just quiet over the last 3 sessions, and that 175 resistance looks big to me.
Spinner talking about one of your big moves of the day, and that's Thor Industries. THO trading up a cool 11% here in the pre-market. 105. This is a big move here. Earnings last night. THO.
$2.11 versus $1.88 estimate, so a nice beat on the EPS. Sales $2.015 billion versus $1.96 billion. So they beat on the top and they beat on the bottom.
And that equals a big move up here in the stock this morning. THO 105. Joel, technically speaking, what are you thinking on this one? Kind of in the middle of nowhere, eh?
2 levels. The pre-market high, if you're waiting for continuation of the move, you need to take that out. That was the spike high. And then on the downside, 105. Since hitting that level, you've been bouncing off 105 here. So below that, it's going to be hard to find some real estate. Give some back here. I'm sure we'll have a wild session here. All-time high, I think we're a little ways away from that. Yeah, all-time high, 112.89. But need continuation to that pre-market high.
Spinner also saying WGO trading up here in sympathy here this morning. WGO getting a huge pop as well, 5.5% here. Big move up for Winnebago.
I don't know what the news is. I was going to ask you. Do you know?
Well, I'm thinking it's sympathy, isn't it? With THO maybe.
Sure.
With Thor.
I guess.
We'll go with that.
Okay.
I didn't look it up either, but I think there could be some sympathy here. And that's what Spinner's saying, and Spinner knows his stocks.
All right, bumping up against 28 here. That's your pre-market high, but not really backing off. 28 will be an important level early in the session. You had a 28.10 high, so we clear that and move your way up through 28.50. I just want to, this is not a heavily traded stock, but just beware that this is up on a whopping total of 650 shares. So it's not a big volume mover. They're marking it up here, but wouldn't be buying it off the open at 28, more leaning toward the sell side at 28.
Unless it's that sympathy move continues there. So, again, I don't know if 28 is strong enough level for me, but I don't know. I think I agree with you. I'm not buying it up here at 28. Jumping back over to other news, I want to go to Apple here for a second. We didn't talk about Apple. We talked a little bit on the pre-market show yesterday because it had the downgrade, but they had that Apple event yesterday. They came out with something. Gene Munster was on CNBC, and he called this new product revolutionary. What was that, Spencer?
Well,
Something with AR?
Well, Jack just told us about it. But I think you were trading when Jack was going on about his thoughts on the WWDC yesterday. But that's okay. I don't know exactly what Gene was.
Cover it again for me for those traders who are trading.
No. I mean, Jack mentioned the Apple, I'm sorry, the Amazon Echo like device, and I don't know exactly what Gene was referring to when he said he said revolutionary and groundbreaking or whatever. But I don't know what he was referring to when he said that. But they had the Wingnut AR, I think is what it was called. Again, I was kind of unplugged yesterday. But Gene likes his Apple. We know that. So not a total surprise.
You got a little follow through yesterday with that Pacific Crest downgrade here. No great setups in the chart here. I think on the downside, support's easier to identify. Two lows in the lower 152 handle, 152.22 and 152.38. So a soft market. I'd look at least there to find support, at least on your first trip up. On the upside here, like to keep an eye on the close. The close from yesterday actually lost almost $2 off that downgrade, closing at 53.93. So need to get green, stay green on the session. Challenge yesterday's high.
So
a couple other earnings.
No, I was gonna jump in for a minute and just say they had the HomePod, which is like their version of the Amazon Echo. They had the new Mac operating system, new Macs, and then new Apple TV stuff. But the HomePod was the big one.
No flying car?
Not yet. Next year.
I don't know.
Jumping back to the earnings parade here, Michael's, our scrapbook store there, Joel. MIK trading down in the pre-market. Doesn't sound like they did well.
38 cents versus 34 cents in the same quarter of last year. Sales was 1.16 billion, which is unchanged on a year-over-year basis. Comps for the quarter down 1.2%, and that's all I got.
Stock getting hit a little bit, down 6% here. It's been beat up here, over the course of the last little while, but really, when you look at it, it's on a monthly basis here. It's been beat up too. It looks like all the other retailer charts.
Pre-market low is 18.18. You're in danger here of taking out the low that it had in a regular session, and that low was only 4 sessions ago at 18.57. That's where we're trading right now. So needs to hold that not taking out the pre-market low of 18.18 on the upside. I don't think you could give me any interest in this stock until it clears $20. 20.03 is your 3-day high, then 2 levels, 2 highs just under that. So the former low move, or still could be the low of the move, 18.57 at $20. Those are my parameters for Michael's stores.
And then the other earnings stock we didn't get a chance to cover was Fred, F-R-E-D, stock trading down 9% in the pre-market. Light volume, Spencer, what are the details here?
6-cent loss for the quarter. Sales of 532.3 million versus 549.5, so they missed. And that was in the same quarter last year, so that number is 17 million fewer year over year. Comps were down 1.2%. That sounds familiar.
Very light volume. You can see 8,500 shares, but 8,000 of those was just a block at 1236. So you really only got 400 other shares trading here. It's very wide, 1255 to 1309, but obviously closed 1360. Offer at 1309 makes me think that it is going to trade probably in the 12 handle here today.
This one, it had that just crazy move where it doubled in one day from 11 to 22. And I think that was based on them being the recipient of some stores if the Walgreens Rite Aid deal went through. Someone correct me in the chat if I'm wrong on that. And then the likelihood of that deal's been dissipating. So was the price of this issue. I don't really think I could get on board with this thing until it gets into under that $12 and fills that gap. That was the area it originated from, but doesn't seem like the fundamentals here are that strong. And I haven't looked at that Rite Aid. Dennis, have you been looking at this Rite Aid and Walgreens at all? This deal is old but dead, I guess. Look at this thing.
I think so. It looks like it's in. And it was going to be a tough deal to get through. You know what? It was the ring the register when they thought they were going to get the deal put through back. Remember, it popped up. I think what the takeover was like over $9 or something. But it got up like 870, and then boom, obviously the deal fell apart. That was just the beginning of the year. This was based on something we're going to lower the price, and it was going to be a lower price for the deal. It just looks like, the deal is dead. And if the deal is dead, I think it's big trouble for Rite Aid. I just don't know if this stock can compete on its own against the CVS and Walgreens.
Yeah, well, it's down here, 332, the low of the move. But I think look for your reasons, look for your fundamentals. Why Fred made that big move up to 22, and see if they can find that magic once again.
Not much in ratings land. I was trying to look and see if there's anything of interest here, but I'll tell you, ratings are very quiet. No big guns there at all. There was a couple initiations, follow through upgrades. Spencer, anything jumping out at you from ratings land that you want to cover?
BMO Capital upgraded Bluebird Bio, BLUE, to outperform. They also raised their price target there from $61 to $108. Nothing. Tyson called initiation from Barclays at overweight. Really no downgrades to speak of this morning at all. I mean, I see 3 minor ones, but that's it. Those are the two that. And Duncan caught an upgrade also from Argus, from hold to buy.
Oh, Duncan. Let's talk Duncan. DNKN. We haven't talked it for a while. Stock actually has been performing very well here. I mean, I go out and look at the monthlies. This is right on all-time high. Dunkin' Donuts, $60, seems like, where it wants to go. Big whole psychological number. Joel, what do you think on the DNKN chart?
I mean, it's hard to argue with this chart here. It's had a nice run up. Is that all-time high there for Dunkin' Donuts? Let's take a look. Yeah.
It is. It's very close, yeah.
59.32. I guess if you're trying to protect some profits here, looking on the daily chart, that low from yesterday is the highest low it ever made. So kind of that's a level I like to keep an eye on, especially at the S&P. Like with the S&Ps yesterday, 33 even was the highest low it ever made. Took that out. You saw a little bit of downside here. Same with Dunkin' Donuts. If you do crack, what was that from yesterday? 58.73. See another low, 58.58. But I don't know, not trying to sell the top or definitely not going long here at this level. Maybe some institutional sellers at $60.
Talk Alibaba. Got 117,000 shares to buy here once again. Stock trading actually slightly in the red by a nickel here, but it's been a consolidation station here. I mean, just kind of hanging out between 122 and upwards of this 125 area, but it kind of looks itchy, doesn't it?
I think I have to fade you on this one here, Dennis. I mean, and the reason is you had this thing make an all-time high, right? And this was back in September of 2014? Is that when we had it? And it hit it hit 120. It was actually in November. Worked its way all the way down to 57.20, and then here you go, over double here. I don't know. I'll be keeping an eye on 125 here over the next couple sessions. A long rally. I mean, if the market continues to go, I think this thing has more upside. Looking on the downside for weakness, any break below 122.50, then you're getting me really interested in the stock. That's been holding up. Had a wild day on earnings, but looking at 122.50 in the downside here in Alibaba and 126.40 on the upside.
Let's talk gold. Gold's getting a nice lift here this morning. The GLD trading up almost 1% here now. A lot of your gold miners are bid up as well. And when I look at these gold miner charts, a lot of them look very interesting. Like look at the Barrick Gold ABX. You had the big sell-off there in April when gold got hit. In May, we bounced off the 16 level up to 17. We come back down yesterday and we tested it again. Now we're getting a lift here. A lot of these gold charts look the same. If you look at Gold Corp, it's the exact same chart. Really, just a different number. 13, 17 got down to. Tested it yesterday. Now it's getting a lift here today. Agnico Eagle Mines has been looking better. Newmont, some of these gold miners here, there's actually, some bottom formations forming in some of these.
Yeah, there's bottom. It just has not responded with the price of gold, though. I mean, I guess AEM has a little bit. Hasn't taken out the low on the move, but I'm looking at the disconnect here in ABX, and basically it's still at its May low. I mean, we're trading up a little bit in the pre-market. I can see it up 30 cents here. But to me, this is a little bit slow to respond here. So I I would say something's got to give here. Either these things got to get rip roaring, or you can fade gold at the $1,300 level. But if you want to hold gold and you want to participate, I mean, these stocks, they do have a little bit of dividend, but boy, you'll be scratching your heads here. I do see it trading up $12, 12.9630 in the gold futures. 1,300 looks like a big level, but I'd be a little concerned with this rally in gold here with the stocks not corresponding. Something's got to give here in the gold market.
It's classic risk-off day when you see gold rallying like that. Your TLT is way up here this morning. TLT is trading up, and of course my internet just dies right now. TLT is trading up 78 cents here, so it's getting a big lift. And like we said, financials are weak here this morning, so it looks like at least a classic risk-off open. So that's makes me automatically think about some of those defensive yield names. Sometimes perform a little bit well. Even like an AT&T and Verizon sometimes do better on days like this. Jump over into just to a couple charts. Let's look at AT&T and Verizon. Two stocks have kind of been beat up. They're starting to get a lift here as of late, though. So AT&T and Verizon, really ugly March, really ugly April. Half of May was pretty bad too, but they started coming back in the back part of May, showing some life here. What do you think of AT&T and Verizon?
$39 here. You can see that snuck over there a couple days ago, so keeping an eye on 39. Nice run up from 37.50. Stock like AT&T will give you a double or triple bottom to play off. You see the double bottom at the 37.50. Now trying to form a couple tops up here at 39. Also Verizon, I'll give you the technicals here. That snuck over 47. That just over 47. I see a couple highs, but I think we could talk about the individual charts on this, Dennis. But I think what is more relevant here is is the Fed done? Is the Fed done for the year as far as raising interest rates? If you look at your TLT, that's certainly showing no fear here, having a nice rally, trading up again in the pre-market. Also, if you're looking for indications of interest rates, you look at your financials. These financials, a lot of them have come off their highs, and they're just sagging here. Not so much the XLF, but look at this Goldman Sachs. I mean, it hit that 252 high, made a new post-earnings low, now holding in here at 210. So I know we have the Fed meeting next week, and we'll be talking more about it, but I don't know. Just something telling you that Mr. Market's telling you that rates aren't going. Also, look at this XLU. If people are worried about 2 or 3 more interest rate hikes, are they buying utilities? They're buying Detroit Eddy? I don't think so.
Yeah, which is absolutely kind of crazy to me. You'd think, this market environment here, if the Fed's scared to raise rates when the market's at all-time highs, and just, but a honey badger market all the way up, when are they going to raise rates then? Like, I mean, this is, if you're, and they are, they say they're data dependent, but, the data's been fine here too. I don't totally get why the Fed has all of a sudden backed off on their course of, raising rates at least a couple more times this year. But the market is saying they're done. And I think the market's usually right. Why do you think the Fed's so scared to raise rates?
Spencer, why is the Fed so afraid to raise rates?
Because they're not data dependent, they're market dependent? I don't know.
But the market's at highs. I mean, the market's at highs. The data hasn't been that, bad, and the market's at all-time highs. At least the S&P is. I mean, are they, I guess they were all talk. Because they said, what didn't they say last year that they were planning on going maybe even 4 times in 2017, raising a quarter point 4 times? And they went once? Did they even go anything? When was the last rate? Was it December? The last rate hike?
Yeah.
Did they do one in March? Did they do a little bump in March too?
I don't think so.
I don't think so.
I don't think they did it. I think it was December. I don't even know if they went once here in 2017. Chad, help me out here. The Fed goes, I think it was December was the last rate hike. They're scared to raise rates, and I don't get it. I don't get why, when the market's up here, if you're not going to raise rates right now, when the data's been okay and the market's at all-time highs, you're never raising rates. And me and Joel said this for years on the show. The rates are low forever. At least, these short-term rates, because that's what the Fed can control. So they're going to, try to keep rates as low as they are forever because everything is built on debt. So, but this is just proving it. I mean, they don't raise rates in the market's this strong. They're never raising rates.
They did go again in March.
They go in March. They went a quarter in March.
Spinner's thrown in here, nervous about the Comey testimony. I certainly hope they're not predicating their decision on something like that.
Yeah, I just can't see, why they can't raise rates here again. But the market is saying they're not gonna. And, even the commentary that we've got from the Fed sounds very dovish. I mean, they sound like they're not going either. So I don't know what changed. I don't know, like a year ago or, 6 months ago, they were saying they could go as many as 4 times in 2017, and they're not going up here at all. And, if I was the Fed, I would think, why not? Why not try to raise it up? Because if if the economy starts to go south, then you at least, you put some
Got
bullets
some room.
back in your gun.
Yep. Yep.
Yeah. But when rates are already low, you don't have anything. So if you could get the rates up a little bit, economy starts going south, then you could start lowering them. You could, help it out. But, you're not getting any bullets back in your gun. I guess they could always just start printing money again. But I just can't believe they're not raising rates this year.
Well, Coach Five says that he or she is reading an 83% chance in June. So,
but the market is not saying that. I mean, when you see in these utility stocks and the financials getting hit, they think that this market is not raising rates here again. So, I think they should. I think the Fed should go up here too. But, maybe it's priced in. But I just think, with the utilities as strong as they are and with financials being as weak as they are, that the market's making its call and they're saying the Fed is done.
Yeah, Dr. J, one more time in 17. Yeah, that would be twice this year as opposed to the 4 that they talked about. Dennis's favorite stock, Tiffany's here, got crushed on earnings. It's always good to keep an eye on how a stock reacts on earnings day. Got crushed, hit $84, bounced off 84 twice, didn't get the red dog reversal. Now coming back to fill that gap. Before I speak, let me see how it's trading in the pre-market here. Not much action. I mean, expectations for it to go up and fill that gap. In order to do that, just under $93, you need to get to $92.77. Of course, you like to see some follow through yesterday's high at $91.35. If you're worried about giving back some gains from being long on this, keep an eye on the double bottom from Friday and Monday. 89.24 and 89.21. Maybe a nice little stop there to lock in some profits. Dennis, any thoughts on Tiffany's?
It's come back. It's trying to fill the gap, and I mean, buy the dippers are winning here again on this one. So I don't know. I can't come in here and buying Tiffany's up here at these prices though. So I'm hands off on Tiffany's TIF.
All right.
What about the other half of the telecoms? Because you had mentioned Verizon and T-Mobile, but what about Sprint? You mentioned Verizon and AT&T, but what about Sprint and T-Mobile? This is a report from Bloomberg yesterday that an all-stock option for merging Sprint and T-Mobile is gaining ground. And we know that both may or may not be in discussions with other partners as well for some kind of a merger acquisition of some kind. We don't know what. But what about this idea of Sprint and T-Mobile merging an all-stock merger?
I mean, this is, for Sprint, this is huge. Like if they can, get, tagged up with T-Mobile, this is huge for them. If this does not go through, if they do not merge, I think Sprint's right back at $7 again. So I think a lot of the recent activity that you've seen running up here in Sprint is because of that potential merger with T-Mobile. So I think, T-Mobile stock doesn't depend nearly as much on this as Sprint does. I think it's probably good for both stocks, but I think Sprint, if, whatever reason this doesn't work out, I think Sprint, it gets hit hard.
Taking a look at the Sprint chart, probably when the news popped up, it popped up to $9, came all the way back down to $7.50. Now working your way back up here, so I'd keep an eye on that $9 level here. News on BlackBerry, we had Mr. Left talk about that last week. Spencer, what do you got on BlackBerry?
They're not. So their QNX software, which is used in Toyota, the Bluetooth software is not going to be used going forward. So, and BlackBerry is our editor Jason Subnell's favorite stock. So, shout out to Chubbs.
Okay, it had the left pop here, but it's giving it back here. I don't know. I'd be more interested in the middle 10 handle here than trying to pick it up at 11. Dennis, any comments on this Canadian company?
It's run up too far for me now. I mean, it was a speculative buy. If you bought it back at $6-7, congratulations here. It's had the nice run up. People speculating that those patents are worth some money and the stock might actually get sold. I don't know if that's going to be the case. I know every rally in BlackBerry that I've seen over the course of the last 5 years has eventually been faded. So I don't see why that trend, unless, obviously gets taken over. But I think, if it doesn't materialize, things starts to drift back down to single digits.
All right, just a couple comments in the chat here. We got some fundamental traders in here. Wave Trader talking about the unwinding of the huge balance sheet will raise rates, so they want to be careful how they do it. Also, Spinner talking about commodities and a downtrend, right? So no inflation. What do you have to worry about raising interest rates? And then you have, of course, Comey, talking on Thursday, so that could send the market in a little bit of a tizzy. And also, what's the other thing, Dennis? You don't have any comments on the British elections, do you? They're also on Thursday.
Yeah, no, I don't follow it over there, so I just know this market doesn't seem that interested, and I can't see that being a real major impact, at least in our markets over here in the U.S. I know we've seen, obviously we had the Brexit, which was a major event there, but it just seems like our markets are disconnected from the world markets right now, at least in the U.S.
All right, Spencer. S&Ps are down 5.5 off the pre-market low of 26.25, trading at 24.29, down 5.75. See if we can get back up mid-range on the day at 24.31. That looks like to be the minor resistance, and your major resistance at the pre-market high 35.25.
On the show for tomorrow, we got Peter Brandt. Joel, you've heard of him. He's the founder and CEO of Factor LLC, a prop trading firm founded in the early 80s. He's also the author of The Diary of a Professional Commodity Trader, which was the #1 ranked financial book on Amazon for a good chunk of 2011. So Peter is going to talk to us about his trading and his career in the markets, and I'm sure Joel and Dennis are pumped for that. That'll be a good one. So Peter Brandt on the docket for tomorrow. That's it for us today. Hope you enjoyed the show. Hope you enjoyed our guest, Jack Kramer, and all of our discussions. If you missed anything in the chat, you can throw it in there, and we'll get to it. Joel will give you some technicals after the show. But that's it for us right now. Have a good rest of your day. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. You can catch our podcast by subscribing to Benzinga's Pre-Market Prep on iTunes, SoundCloud, or Stitcher. You can catch the live show by subscribing to the Benzinga TV YouTube channel. You'll get it notified when we're live every day if you don't want to watch it on the Pre-Market website. So again, have a good rest of your day. We'll see you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.